Hi, this is Joe. We're going to talk about the market today. Hope you caught my segment on Stock Charts TV. Just a small guest appearance, but I am going to be doing some more content over there, so keep an eye out. So I'm going to talk about the S&P and the QQQ, just to follow up and continue what we've been talking about. But it's kind of interesting. We finally got some sellers to show up, and let's see how that's reflected in the chart. So I'm going to get right into it. First thing, I just want to make sure we're focusing in on these key things. And I think if you're going to be successful in the marketplace, you have to have some form of a strategy for figuring out what the market conditions are. They don't have to be identical to mine, but you can use mine as a pretty good framework. And I would tell you that they should have some type of a trend and momentum component. Volatility should play a role. Overbought, oversold condition should be measured. And I would measure it a couple different ways, and then have a sentiment indicator that you like. So we're going to go straight into the S&P, and I actually, starting with the monthly chart, I figure I would just start with the sentiment right away. So let's just evaluate what has taken place over the last 6 months in just a small time frame. We've gone from a bear market bottom where we undercut the lows from 2018 in a very violent fashion, and we created a situation where the bull bear spread got to negative 14. That means there were 14% more bearish advisors than bullish. And then after a phenomenal move to the upside, we've gone up for 5-6 months now, including a 7% move last month. We've now gotten the bull bear spread to a plus 45%. So that means 45% more of the advisors are bullish than bearish. So that's quite a swing. And as I've mentioned for probably the last month or two, when we get over 40%, you got to be a little bit more cautious. You got to pick your spots a little bit. So I just think it's relevant to bring this up. So as we move into the weekly chart, it becomes more pronounced, and I mentioned this last week. Look at how far away this had gotten from the 18 and the 40. And these lines, especially the 18, when you get too far away from that line, it's going to start to pull you back. It acts as a leash. You don't get too far away. If you go back and look historically speaking, you can see when it gets down too far to the downside or to the upside, it tends to pull it back. And even with the crash earlier this year, yeah, it got away, but once it turned back, it snapped all the way back to it. So it's a good thing to kind of keep an eye on, and I use that as part of the measurement of whether we're overbought or oversold. And I like to look at it on a weekly chart, and we have definitely created some pullback risk. Let's go to the daily chart because there's some interesting things finally developing here. So I have mentioned, in fact, in my little segment on Stock Charts TV, I mentioned how low the red DI has gotten. And if you notice, in fact, I'm just going to take this back a little bit. Look at where green DI, and so at the bottom of the bear market, green DI, which is the strength of the buyers, got down to a incredibly low level. Down in these mid, like single digit level, 5, something like that. And then we just did the exact same thing on the selling side, the red DI. So as I mentioned, I think it's important to keep an eye on this. I was actually looking for, let me just draw this trend line in, a higher high to form, just to sort of signal that, there's some type of reversal taking place. Personally, I like to see a higher low and a higher high. We've only made a higher high right now, but if you notice, green DI has also come down and made a lower low. So what we're talking about, and what I've mentioned in the past again, is when green is moving up and red is going down, we're in an expansion phase. Once that trend starts to change, we go through a contraction period where these lines, this green line will make a lower highs and lower lows, and the red line will make higher lows and higher highs. When we look at what's taking place on the daily, we've been expanding we've been in an expansion phase, and now I think we've got the start of a contraction phase. So the only other thing I wanted to mention, and this is one of my favorite charts I've mentioned plenty of times, I've got the 18-day, the 18-week, and the 18-month line. We've in one single day, we've come all the way down to the 18-day. So, you know, this is a key support level. How it reacts here will be important to measure. But the fact that it did it in one bar, and it's a big bar, I think is pretty important because if you notice, this ATR is starting to pop through the moving average. Now, we've still got some work to do. It needs 2 or 3 more days probably of pretty good size to get this to pop up, get the moving average to turn up, and then maybe we look for some type of a retracement back up. And that would signal to me that we've got, you know, a deeper pullback coming, you know, down into the 3,000, 3,200 zone, something like that. So we'll just have to see how this handles this period in the, you know, over the next, actually just over the next couple days. Let's take a quick look at the hourly chart because, again, if a trend is going to develop to the downside, it's always going to start from the hourly. So I like to look at it from that standpoint. Violent move through the key moving averages. We've certainly got the makings of trendline break. But and if you look at what happened in the, let me zoom in a little. In the last hour, we started to recover. Normally, when I see that, I sort of, so what I'm looking for is actually something along these lines, some type of rally up, and then a move back down to new lows. If we do it that way, I think that sets the stage for a break of this 18-day. So we'll just have to keep an eye out. We did get pretty good negative DI taking place. You know, again, it's all about the reaction. We don't have to guess. We can see if we get a signal. If you do get a signal, then it's probably worth playing if you're a trader for some type of a move back to the downside. Or if you're looking to hedge your portfolio, if you've got some longs out there and you maybe want to hedge against that, you could buy some cheap puts in the S&P spiders. For a play down towards this 3,000 zone. So I think that's how I'd be looking at the S&P. If we go and look at the, let me go back to all 4 charts. So if we look at the Qs are just a more powerful version of the S&P. I mean, the trends are basically the same. All the trends are positive on all 4 time frames, but the pullbacks on the daily chart were a lot less significant. They held the 18 pretty much the whole way. And again, we're back to the 18. I thought I'd bring up, look at the, let me zoom in a little. Look at the movement in the ATR in just one day. We have been trending lower and we got a pretty big pop. That's what happens. You get really quiet. It doesn't take very long to see an ATR shift takes place. So again, just if we keep the size of these bars a little bit bigger over the next, you know, week, something like that, I think there's a pretty good chance we're going to see this volatility component turn negative. So something really to keep, I think, to keep a close eye on. If we go and look at the weekly chart, obviously we've been making a pretty good run. And what I mentioned typically when I look at this is if I see parallel lines where the 18 and the 40 are rising at about the same rate, I usually feel pretty good about the trend. If you notice here, it's starting to accelerate at a faster pace, and this is still pretty stretched away from the 18. So again, I think there's some pretty good pullback risk, especially when you consider, you know, where we stand on the sentiment numbers. You're starting to get these market conditions in a position that I think where there's certainly more risk in the marketplace. The question is, does selling continue to show up, and does it create a little bit more of a contraction phase that I think would be good for the market, because you want to get these bulls down. There's too many bulls right now. It acts as a headwind for the market when there's so many bulls. It's just very hard. And most people don't make money in the stock market. I mean, it sounds cruel, but the reality is when there's too many bullish people, the market's going to have a very difficult time making any real huge moves to the upside. So we're at interesting times. We'll have to just stay tuned. I might do more. I might do the S&P updates or the market updates a little bit more often. All right, we'll talk to you soon.